I think, options for a banker, I mean, you generally have your servicing department, and depending on the bank, whether they're, a large money center bank, or, at the other end of the spectrum, a community bank or credit union, the collection efforts and the workout efforts are going to vary. But I think that you're generally, you're going to look at a couple of options. Either you work through the loan and you get a borrower that has fallen behind, reperforming, or in our case, Faller Financial and Buffalo Park have been good outlets for banks in scenarios where they deemed the best option to be to sell a loan. It could be a quarterly sale. It could be just an intra-quarter, just random, just periodic loan sale, or it could be a year-end sale. So oftentimes the reason we see end of quarter or end of year is because for reporting purposes, it's kind of front and center for special asset managers to say, okay, what are we looking at here? The term classified asset or non-accrual, you hear those terms in addition to just, very common terminology like non-performing loans. But non-accrual, they may have stopped paying. Classified, they're just impaired loans, and the bank wants as few of those on the balance sheet as possible, and that gets into your whole liquidity ratios. And Texas ratio is a ratio of stress for a bank. So the higher the Texas ratio, the more stress the bank is under. You saw a lot of Texas ratio spike before bank failures during the Great Recession. But that's something that those are the options that you really have is, you're doing some forbearance, you're doing some maybe deferral of interest or of principal, maybe putting it to the back of the loan, or in some cases, you may just, that the best outlet is to just get rid of the loan entirely and find a very reliable, predictable loan buyer.